Hello, everyone. Thank you for attending. And today we have a very interesting topic and a special new speaker. Before we do that, my name is Si-Wing Yi from the Yi Real Estate Network. And we're proud to introduce you Miss Kaaren Hall from Udirect IRA Services. Hopefully I'm not mess up the name. So
a little bit, but that's okay. Yeah.
Yeah, the reason why I asked Kaaren to present with us is to introduce our real estate investors with another team, right? We work as a team, as everybody knows, and her company help real estate investors to use their self-directed IRA to purchase investment real estate. And so briefly, Kaaren, thank you for coming on board. I know you're very, very busy helping a lot of investors to do this kind of things. So can you briefly describe, what is your background and what's your company, what's your philosophy, and so forth and so on? Go ahead.
Sure. I have a background in real estate and property management, real estate as a real estate agent for a short amount of time. And then I got involved in mortgage loan servicing and mortgage loan origination, and what all that did to get. Plus, I've purchased properties and I've owned rentals, and so what that does is it gives me the background of understanding documentation, the process, the sense of urgency you have with real estate, and probably 90% of the transactions that our account holders invest in are real estate related. So that's my background, and that's what makes Udirect so successful, is that I hire people that have a similar background so that they understand your deals when you're bringing them in.
Yeah, good, very good, very good. I'm really looking forward to working with you and your team. But just so you know, we've been, I've been doing this for a long, long time, and it is also my passion, because I also have a previous tax and financial planning background before I opened up my real estate investment club in 2004. So I truly, I'm not a tax advisor, obviously, neither are you really.
No.
But yeah, but I'm very passionate about helping investors to use their self-directed IRA to invest in real estate. And still to this day, I'm sure you agree, there are even many experienced investors, they still do not understand the value of using self-directed IRA to buy investment real estate. I mean,
it's true.
Boggling, isn't it, Kaaren?
It is. It's kind of the best kept secret, but I think more and more people are hearing about it every day. Yeah.
Absolutely. So without further ado, Kaaren, I know you're gonna you have a PowerPoint to share, so go ahead and share your screen and take it away, and let's enjoy this educational experience.
Thank you, Si-Wing. I really appreciate it. Okay, here we go. Let's find the PowerPoint. Here it is. All right. I guess hopefully you can see that.
Yep.
Now we are going to start the slideshow. There we are. So as Si-Wing is saying, my name is Kaaren. It's Kaaren Hall, and the company is Udirect IRA Services. And what we've been doing for more than 12 years is helping people to take their retirement funds from where they are now, maybe 401k with a previous employer, maybe IRA funds that you've saved, maybe you're contributing to an IRA, and take those funds, and instead of investing them in the stock market, invest them in alternative assets like real estate. So that's what we're going to talk about today. And also, as Si-Wing pointed out, we're administrative, and we help you get the money from point A to point B, to get assets into your account. But what we don't do is give you tax advice or legal advice, and we don't recommend any particular investment, right? So we're investment neutral. What we are is just we're self-directed positive, okay? And so we want to help you with that. And that's the very thing that we do. So when it comes to self-directed IRAs, there's one reason for a self-directed IRA, and that's to save for retirement. And I'll tell you what, retirement comes at you faster than you might even realize just how fast time goes by. Like if you're saying, oh, look what day it is on the calendar, I can't believe it's already this day. No, you see how fast it goes. So understand that the time to start saving is right now. There's a huge deficit between what Americans have and what they need to retire, right? And so think about it this way. If you had $100,000 in retirement and you're 59 and a half, you think, well, you know what? that's a lot of money, I'm going to retire. Well, that's probably not enough to retire on. If you took that much money and assuming that you're going to live, until you're 86 and a half, and you divide that up into, monthly payments, you would be retaining like about $400 a month, assuming no gain or loss. So you really need more money saved for retirement so that you can retire comfortably. And that's what we're here to help you do with the self-directed IRA. There is so much money in American retirement accounts. I mean, about $35 trillion, or maybe even a little more. And this is important to know because if you're raising capital, maybe you're purchasing real estate and you're looking for somebody to partner with you, then you can say, hey, do you have an IRA? Do you have a 401k with your, or 403b or 457 with your previous employer? And they say yes. Well, maybe they can partner with you and acquire that property with you, and they can bring their IRA into the deal as well. So if you haven't heard about self-directed IRAs, like we were just saying this, that not everybody's heard about it. I mean, you're not alone if you haven't heard about it before. Even some CPAs and attorneys haven't heard about it. But self-directed IRAs have been around a long time, since Gerald Ford signed the ERISA Act into effect in 1975. So since that time, you've been able to invest your retirement in anything except for life insurance contracts and collectibles, right? So that is a long time. This is not new. It's been around for quite a while. So what's the difference? People ask me this all the time. They say, hey, I've got this account, it's at Charles Schwab, and I want to use it to buy real estate. Well, what's the difference? Why do I need a self-directed IRA? And that's because financial advisors are licensed to sell certain assets, and real estate and alternative assets doesn't fall under that heading typically. A self-directed IRA lets you invest outside the stock market into non-correlated assets, sometimes called alternative assets like real estate, other things too, precious metals or private equity, tax liens, things like this. But real estate really is the primary asset that our account holders invest in. Now, before we talk about investing your money, let's talk about protecting your money. And let's talk about due diligence. Just always make sure that you investigate these assets before you invest. Talk to people who've invested with your asset sponsor before, or if you're buying a property straight up, make sure that the seller actually has legal title to the property and that they can actually sell it, because we don't want you to have a bad situation. Because if your IRA does invest in an asset that turns out to be toxic, meaning, you get no return at all and you just lose your money, you don't get to write that loss off in a retirement account. It's simply lost. And it's very difficult to build that back because there are caps on how much you can contribute, all right? So begin with the end in mind and do your due diligence ahead of time so that you have an extremely positive experience and you get to use this money to retire safely. So again, what I was mentioning is that when these accounts were created, you could invest in anything except life insurance contracts and collectibles. So no fine wine collection, no collectible coins, no wine collection or art or anything like that. Pretty much everything else is okay. Now, that's what the IRS says. But every different custodian is going to have asset classes that they consider to be administratively feasible, if that makes sense. And I'll explain what that means. It means that the custodian makes a business decision about what assets they will and will not custody as a business decision, how they want to run their business. There may be some assets that your custodian won't custody. So you need to ask ahead of time. But real estate is usually, pretty good bet that they'll custody that asset. So you think, well, hey, this sounds pretty good. I'd like to self-direct, or I've got people that want to self-direct their funds into my deals, and they've got their funds with their current employer. What's the deal with that? Because I was saying previous employer before, and this is why. The plan probably doesn't allow for funds to be moved while you're still working at the company or the institution. You're still in service. But if you have a 401k, you may be able to get what's called an in-service transfer. And so the way you would get that is you would ask the plan administrator if the plan allows for an in-service transfer. And if it does, well, then you can move some of the money, but you have to ask. And the answer could be yes. So there you go. Okay. So if you have any questions, by the way, you can email me at info@udirectira.com. I'm very happy to answer any questions that you have as we're talking here. But we're going to talk about the rules now. So the IRS lets you save money for retirement, and the proceeds are either tax-free in a Roth account or tax-deferred. That's great. The whole purpose is so that when you do retire, you've got enough to do that with. But before the IRS is going to give you that kind of tax-protected income, there are rules. And that's what we do is we'll talk to you about your deal and see if it fits in the box for self-directed IRA investing. So number one really is that you don't have any personal benefit. You don't use the IRA and borrow money from it personally. Now, yes, you can have a 60-day rollover in an IRA. Yes, if you have a 401k, you can take a plan loan. But typically, if it's an IRA, you don't use it to borrow money like on a note. You don't sell any assets that you currently own to the retirement account. It's not security for a loan. And you don't use it to buy property for personal use, present or future, no personal benefit prior to retirement, right? So all the rules, pretty much, most of them anyway, center around people who are qualified or disqualified. So you want to keep away from disqualified people. And who are they? Well, you're a disqualified person to your IRA to start off with, but mostly it's your lineal ascendants and descendants, your parents and grandparents, you and your spouse and your children and your grandchildren, disallowed, disqualified to the IRA. All right, good to know. Also, if you have a 50-50 business partner, or if you have a fiduciary like your realtor or your accountant or something like that, they're disallowed to the IRA. I will kind of explain how that all works in just a minute, but the qualified people are the people out to the sides on your family tree. So it's not just enough to say that, you don't say that you can invest with family members, it's where do they sit on the family tree, right? So your IRA can, make a note to your nephew. Your IRA can own a condo and your uncle can live there, but your dad can't. Your father is disallowed, your uncle is a qualified person. So this is, the first rule to know, really. The whole IRA game is a game of keep away here from prohibited transactions. Neither you nor any of those disqualified people can have personal benefit from your account. That's why your IRA doesn't, like, for example, make a loan to your spouse so they can start a business. That would be a disallowed person receiving personal benefit from your IRA. And by the way, if you commit a prohibited transaction, it's not just like a slap on the wrist. It blows up your IRA. It ceases to have tax protection, and you will get a 1099 for the value of it, and you might be penalized as well. So it's really important to keep away from prohibited transactions. That's why we will schedule a free consultation with you and talk to you about how you're structuring your deal, and if it sounds like there might be a prohibited transaction involved, okay? So number two, you can't buy, sell, or exchange assets between the retirement account and the disallowed people. So your IRA doesn't buy a house you already own, you're disallowed. Your IRA doesn't sell property like to your kids or any other disallowed person. But number three, these disallowed people, they're not allowed to offer services to the plan. Now, what does that mean, right? So we had, one of the examples I like to use is that we had somebody who was buying real estate with their IRA was buying real estate, and they had a last, obviously a last name. So we're looking through the investment docs, looking, going through the, the purchase agreement. And wait, guess what? The listing agent had the same last name. Like, wait a minute. It's kind of a common name, but we said, what is your relationship to the listing agent? And he says, oh, well, that's my dad. Like, no, your father's a disallowed person. And in this case, the father was A, looking for personal benefit. The father wanted a commission on the deal. And B, he was a disallowed person offering services to the plan, offering his listing agent services. Even if the dad was going to do this for free, it would still be a prohibited transaction. So these prohibited transactions aren't just self-evident. And that's why we always want to talk to our account holders before they proceed with an investment. We want to make sure you understand and that you have a good experience. So when you self-direct, you want to know who the players are. If you're going to win the game, you need to know the rules and you need to know the players. So there's you. and you drive the bus on the whole thing. It's Udirect, right? Udirect IRA services. Then you have this IRA tool that's like a tool in your tool belt to use for investing. It's a fabulous tool where you're going to get tax protected returns. Yay. Then there's Udirect IRA services, you know. And when I founded this company in 2009, I enlisted the services of a trust company custodian to act as the back office and to hold our clients' funds and do the cash management. Okay, so those are the players of the game. But I think everybody, Sealing, tell me, am I right that all of your group, they're all real estate investors, right?
Yes.
Okay, so it makes sense to, we'll talk about this. Buying real estate with your IRA. Maybe you've heard about it. Maybe you've heard somebody say, just don't do that. Oh, it's too hard. Well, it's not too hard. You just need to know the rules. It's completely doable. But just to be fair, we'll talk about the pros and cons. So the upside about using a self-directed IRA to buy real estate for your own IRA is that all the gains, capital gains, you know, whatever it may be, the rental income is not taxed at the time you receive it. It's not in that tax year. It's tax-free or tax-deferred. That's huge. You know, you get to keep more of what you earn. There's no time limit for holding that property like you might have in a 1031 exchange, which is a different kind of a tax saving structure that exists outside the IRA. An IRA can actually borrow money. And coming from the mortgage industry, as I do, I thought I was really blown away when I learned that an IRA could borrow money. It's not the person borrowing the money, it's the account borrowing the money. I'll talk about that in a minute. But the greatest thing about using a self-directed IRA to invest in real estate is that all the proceeds are tax-free and tax-deferred, so you compound faster. You buy a property and do whatever, maybe you fix it and flip it or whatever you're going to do, and you sell it. You have a liquidity event. All that money comes back in your IRA account, not touched by tax, so all of it can go back out in the next deal and earn even more money. And you keep churning and churning and compounding as you go forward. And hopefully you create this big snowball of retirement savings. That's what we want for you. That's the upside. The downside about investing in real estate with a self-directed IRA is that you don't get the tax advantages in an IRA that you get outside of the IRA. So if the question is, hey, I've got a lot of money in the bank, but I also have this big retirement account and I want to buy this house and invest in this rental property, which one should I do? Should I do it personally or should I do it through the IRA? Well, first you talk to your tax person and get tax advice, but you may find that you get more tax benefits doing it personally, but you have to, of course, your due diligence, you know, you have to pencil it out, like acquisition costs, closing costs, rehab costs, taxation, where does it all boil down, you know, and which one makes the most sense for you? All right, so that's one of the downsides is that you don't get the tax advantages of owning real estate. No deductions or anything like that. Of course, it's self-directed. We're not telling you what to invest in. And so you, as the account holder, are self-directing and you're entirely responsible for the gains and losses in your account. Also, like I mentioned earlier, if you have a situation where you end up with a toxic asset that isn't going to pay you anything back, it's hard to replace those losses. So I think it's only fair to talk about the pros and cons so you've got a balanced view of what you're getting into with the self-directed IRA. And we're here to help you play to win, right? So you know the rules. I did mention that an IRA can borrow money, but it is not from, you know, a lender. It's not well, it's from a lender, but it's not a Fannie, Freddie, VA, FHA conventional kind of loan. It's not that kind of loan. It's a kind of a what would you call it? Like a corporate loan sort of, or a commercial loan. The loan has to be non-recourse, okay? So what that means is if your IRA were to take a non-recourse loan and default, the lender can only come against the subject property, right? They can't come after you personally, and they're not going to come after any assets in the IRA. So that's good, right? So let's talk more about it so you fully understand this. There are not a lot of lenders to choose from, but we do have a list that we're happy to share with you. If you'd like our list of non-recourse lenders, email me at info@udirectira.com. I'll send you the list of non-recourse lenders, okay? They're really going to typically require a larger down payment. So not it's not like you're just going to borrow 5%, or it's not just, the IRA isn't just the down payment. Usually the IRA is coming in with the bulk of the funds, and the non-recourse loan is just making up the difference, typically. And now, of course, you're disallowed to the IRA, so you're not going to personally guarantee that loan. No personal guarantees are allowed. That would be a prohibited transaction if you did that. However, where it's true that your IRA is income tax free or income tax deferred, there are two taxes that do apply to IRAs and 401ks, well, for the most part. One is UDFI, unrelated debt financed income tax, typically applies to IRAs and can be waived for 401ks if your 401k is using it to acquire real estate. It's the initial purchase. So unrelated debt financed income tax, here's how it would work. And first off, you want to have a chat with your tax advisor so they understand this before you get started. It's part of your due diligence. Say your account you invest in $100,000 property, and $70,000 of it came from your IRA. $30,000 of it was borrowed money, this non-recourse money. So now here comes your rent check, and your rent check says $1,000 for the sake of math. So 30% of that $1,000 rent check that you just got, or your IRA received, was because of leverage. And so that 30%, that $300, will be subject to this tax, all right? So you want to know about that. The other kind of tax is UBIT, unrelated business income tax. So when your IRA invests in an active business like a franchise, or sometimes excessive flipping in an IRA can be considered, and running an active business in an IRA, your account can be subject to unrelated business income tax. So I recommend that you learn more about this. You can go to the IRS's website, irs.gov, irs.gov, and look up Publication 598. Publication 598 will explain these kind of twin taxes and how they work, all right? But you just need to know the rules before you play the game, and this could be a factor. So how do you get a house in a retirement account? I mean, we all know how to invest our retirement accounts in mutual funds and stocks, and it's pretty easy. Right now, it's point and click pretty much, but how do you get a house in there? So first off, it's buying a house, and you've probably done that before, so you know that process. But the first thing you want to do if you want to acquire the property with a retirement account is to open a self-directed IRA, because until you do that, until the account is open and funded, you can't make an earnest money deposit. You can't write an offer really in the name of the account until it exists. So first open the account and get it funded, all right? You fund it by rolling over a previous employer plan or by transferring an existing IRA, all right? Remember, the IRA is the investor, so it's vested in the name of the IRA. We review the documents, and assuming everything's great, we fund, record, you get your keys, your tenants move in, and they make their check payable to your IRA, okay? The custodian for the benefit of your IRA. That's a process. You open the account, you get it funded, you invest. All the proceeds of, from the assets have to go back into the account that owns the property. That's important. Now, what if you have two renters? Guess what? They have to each write a check to the IRA. So that's important to know. So what might make it easier for you is for you to hire a property manager for your IRA properties. With IRAs, you want to keep things arm's length. Remember, you're disallowed to the IRA, so you're not allowed to offer services to the plan. So a lot of times, if you're going to have multiple, tenants, it might make a lot of sense to have a property manager manage your IRA-owned properties. So let's talk about an example about how this father and son put a house in their IRA, okay? But wait a minute, aren't they disallowed? Yeah, they are, but here's the exception. This is the exception. So dad has cash. The son has a self-directed IRA, a traditional self-directed IRA in this case. So it's going to read, the son's IRA, 50% owner, the dad, 50% owner, tenants in common. That's how it reads. And yes, they're disqualified, but this is the exception because before the deal, as long as neither one of them had any ownership interest in the property at all, well, then there's nothing to be disqualified from because they're going to invest concurrently. And it's because it's a new deal that they can do that. So after the deal, well, that's when the disqualified person rule comes into effect. So they're never going to, either one of them will ever stay in the property. They'll never rent it out to one another. They'll never sell it to one another, okay? So that's disallowed. After that, they have to keep arm's length on this property. So that's important to know if that's your plan. So again, they can never buy each other out. And when it comes to expenses and profits, like say, here comes a rent check, well, it'll be split pro rata. In this case, 50-50. So the son is going to receive 50% of the rent. The son's IRA is going to, and the dad's going to receive 50%. Same thing with the bills. Here comes a property tax bill. The son's IRA pays his share, in this case, 50%, and the dad will pay his 50% share of the property tax bill. Usually they need that check in the same envelope, you know, but that's how that works. So it's a little complex, but if you want to talk to us about it, we will walk you through the whole thing. I did mention that when it comes to expenses of the plan assets, like you're going to flip or fix up a property, or even expenses like property tax, closing costs, you need a new water heater. Those expenses have to be paid for by the IRA. So you need to leave, a rule of thumb is like a 10% reserve in the account for these kinds of expenses. Because if you don't have the money to pay for these expenses, you have to sell the property. And so you probably don't want to do that. You want to make a profit here. So if you run short on your reserves, what you can do is make a contribution to your IRA. Write a check to your IRA account, and the amount you can contribute depends upon your age, your account type, and your income. So you ask your tax advisor how much you can contribute. You could liquidate other assets in the IRA. Sell a different asset, use those proceeds to make up for the shortfall. You could transfer money from another retirement account. Maybe you still have money in the stock market at another account. You just transfer it on over. You could bring on a partner, like a debt partner, and borrow the money. The IRA could get a loan to make up for the shortfall, or if all else fails, you sell the asset. So you have to make sure that your IRA can afford to have a piece of real estate because it does have to pay for all the expenses. You may have heard of something called a checkbook IRA, right? A checkbook IRA, it's also what it really is an IRA-owned LLC. This is a tool that an IRA can use. It's an asset that the IRA acquires. It's not a gift with purchase. When you open a self-directed IRA, you do not automatically receive an IRA-owned LLC. And people have that misunderstanding quite often. So you've got an IRA, self-directed IRA, it's open. You've got a special purpose LLC that was created by a third party. Why a third party? Because if you created it, you would own it, and your IRA cannot buy an asset you own because you're disallowed to the IRA. See how the logic works? But you've got a self-directed IRA that's open and funded. Your IRA-owned LLC has a checking account, so the money goes from the IRA into the checking account of the LLC. Now you have the ability to write checks. Maybe it's you're investing in real estate and you've got to pay contractors. You have to follow the prohibited transaction rules in an IRA-owned LLC, and you want to be super careful that you're audit-proof and that you keep good books on this. Maybe use Quicken or QuickBooks, and make sure that every expense is either an expense to acquire an asset or an expense to pay for one of the assets that your plan already owns, or that your IRA-owned LLC already owns, and then you'll be okay. So you just want to keep good records with this. So we call it the self-directed IRA, but it's kind of an umbrella term for all these different plans, right? It's the traditional, the Roth, which is great, the SEP, simple, spousal, inherited, IRAs. It's also the solo 401k. So a 401k for somebody who is a solopreneur, right? They have a business with no full-time employees, and it's a great plan, and I'd be happy to chat with you about it. If you have a company and no employees, it could be a really great thing for you. And it's a great thing to talk to your tax person about. What you want to do is talk to your tax person about, like, hey, does this make sense for me? And other plans that can be self-directed include a forfeit, a cover debt, also known as an ESA or Education Savings Account, and a health savings plan, an HSA. They can also be self-directed. Okay, so now you understand self-directed IRA sometimes refers to all of these plans. So how do you do it? Pretty straightforward. You complete an application, you open an account, takes a day at the most. You fund your account either by transfer or rollover or contribution. So it's open, now there's money in it. And once you open and there's money in it, you invest. And then 100% of the proceeds from the assets in the account go back to the account that owns the asset. And if there are any expenses, that account pays the expenses. So opening an account takes a day, funding the account, getting a third party to move the money to this account can take up to maybe 2 weeks. So factor that into your timeline. But when you go to actually, when the account is funded, getting the money out is like 24, 48 hours. We really have a quick turnaround. So you open, fund, and invest. And with that, that is the end of my presentation. I've given you a lot to think about. So please email me. This is my personal email, khall@udirectira.com. And I'd be happy to address any question that you have about self-directed IRAs. And there's always a little technical thing that people will ask me. I love getting surprised. I really want to hear the question that I can't answer. That would be fun. And so with that, Si Wing, I'll hand it back to you. Thank you so much.
Yeah. So if you could unshare your screen, we can go back to our normal view. Yeah, they're very, very high level basic information. It's a very, very concise, very well done from high level. So there's a, it's a one step of the educational journey for real estate investors. Thank you, Kaaren.
Yeah.
I had to remember that. But my goal right now, to be honest, the ratio of our investors that purchase investment property through our network, I would say that the ratio of people that buying using their name versus buying using a self-directed IRA is probably 90-10. Right, 90% purchase using, and I'm not saying good or bad, but my goal is to slowly change the ratio. So, as I told you from the beginning, I have a previous tax background, and I'm very passionate about educating my investors to use their self-directed IRA to buy investment properties. And just simply, although I helped quite a few of them over the years, I personally feel I have not helped enough. And with the collaboration of you and your team and us working together, and also bring in a licensed tax advisor into the mix, together as a team, we can continue to educate and inform our real estate investors so they can make a decision, so they can tap into their IRA assets to invest in real estate, because they have not done enough. They just, another reason why I feel is my personal opinion that even though you gave a very good high level education tonight, but still, and I also guide my investors, educate them as well to how do you use their self-directed IRA. I still have this sense of frustration that many of them still do not get it. And something is still not clicking, not enough. Yeah. You know what I mean?
Yeah, I do.
So it's my commitment and passion to try to find that what is getting in the way, of helping more real estate investors to use the IRA to buy real estate, because I feel the return on real estate is higher than the stock market and the mutual funds. I know that for a fact. Yeah. Okay. Yeah. Above all, I also have consulted over the years some of my investors to use their non-recourse loans to leverage against the self-directed IRA, and I feel I've done a good job at it. And yet, many investors they still are not sure. The paperwork, the technicality involved, of doing the self-directed IRA paperwork, I believe is another reason why it's preventing our investors to using the IRA to buy real estate. So
at that point, if you look at our paperwork, it's pretty straightforward. It's It's your name and your address. It's super basic information. It's nothing that you really have to look up, except maybe your spouse's social security number. If you're married, we never remember that, but it seems like so. But it's really straightforward, and we do walk you through it. So
yeah,
we've had thousands of account holders complete the paperwork, so it's not tough, and we do help you.
Yeah, I truly believe it. I mean, like I said, it's just we mentioned at the early part of the presentation, there are trillions of IRAs out there.
Yeah.
And most investors, they invest so passively using mutual funds, earning paltry low returns, and the Wall Street and the stock market and their own traditional financial advisors are not, introducing the power of using self-directed IRA, and it's just mind-boggling, this brainwashing and this just is my role, and like I said, I'm very, very passionate. I'm sure you are too, to continue to educate and inspire our risk investors to use the IRA to buy real estate.
Well, it's such a powerful tool. And you know who John Oliver is, right? The comedian, and he's on HBO, or he does last night, this week, or something.
Who is now? Was it
John Oliver? He's a comedian on cable TV. Anyway, he has this little episode, you can Google it, called Teacup Pigs. If you go John Oliver, Teacup Pigs.
Okay.
And then you can watch his video, and he talks about how when you invest through a financial firm, how they're taking fees on the back end, and how much of your retirement earnings you really actually have at the end of the day. With a self-directed IRA, we're not taking anything out of your proceeds except a $275 annual fee. That's our annual fee. It has been that way. That's our fee for a large number of years. And so we're not participating in any profit when you sell your IRA-owned asset. We're not taking part of that, like they may be with your stock investments. And so you just keep more of what you earn with the self-directed IRA too.
Yep, Kaaren, you're absolutely right. So I know this is we're running almost out of time now, but for future educational webinar we can do, let's pick some questions. Let's do a kind of a Q&A. Right. I'm going to incorporate maybe 10 real estate investor questions about self-directed IRA. And then make a webinar out of it. That will be down the road. We can do that, right? So tonight is merely a high level introduction. That's fine for me. For my investors, get to know you, who you are, and your company, so we could collaborate together and work as a team to help our mutual real estate investors to empower their financial goal and freedom using the power of IRAs to. Right?
That's right. Absolutely. That's what we do all day. And just happy to help and answer any question that you have. Absolutely.
Once again, thank you so much for taking your time out of this day to do this. And let's work together. And together as a team, we will achieve success for our mutual clients. Thank you so much.
Thank you.
Kaaren Hall from Udirect Services.
Yeah.
Thank you so much. Have a nice day.
Bye.
Bye-bye.